Gentlemen, it is wonderful to have you here in Accra and to have you there in the United Kingdom as well. Two cities today are opening the same door. And for all of us, what you're about to witness is a new chapter or the beginning of an exciting new chapter in UK Africa trade finance. It is happening here live in Accra and of course live in London simultaneously. My name is Anita Erskine. It's an absolute honor to be at the forefront of something so historic, if I may call it that. Now, ladies and gentlemen, we're convening here, but please, a little disclaimer, this is not the launch. We have asked you to join us respectfully and humbly to explore what opportunities lie therefore when we're talking about the Neofingo digital trade finance protocol, to listen in on conversations on the possibilities of this digital platform, and to also grab and grasp your interventions. This is an engaging gathering. We want to know what you think. Who are you? Are you SMEs? Are you entrepreneurs? How will this platform boost your business across borders? Ladies and gentlemen, we are convened here under the auspices of Ghana's 24-hour Economy Secretariat in partnership with ODI Global, the UK Foreign Commonwealth and Development Office, FCDO, British High Commission, BHC, the AFCFTA Secretariat, and the British International Investment across Ghana and the United Kingdom. Moving swiftly to our introductory remarks, it gives me great pleasure to invite this gentleman onto the podium to open our dialogue and, of course, set the tone for what lies ahead this morning. Please warmly welcome the head of Fund 24, 24-Hour Economy Authority, for his introductory remarks. It is Arnold Parker.
Thank you very much. Hello and good morning, everyone, to all our distinguished guests here in Gathered. Today's program is really going to be one of a kind because we are opening up a corridor, a trade corridor between the UK and Ghana. And what we want to do with this corridor is to digitize the processes that SMEs would usually require and then be able to facilitate trade. And as we embark on this journey, I believe it's going to be one that we would come to understand that a lot of thinking and innovation has gone into how can we begin a process of getting a lot more Ghanaian SMEs on the trade wagon. In a few minutes, we'll be showing a video. The video seeks to explain Neofingo in detail, but it's also one that is jointly being shown in Accra and London. And as we go through this, it would allow us to begin the journey of how we explore the use of this platform to open up trade corridor, the Ghana-London trade corridor. And eventually, we're going to see that we would now be able to onboard other countries onto this trade corridor. So what would then happen as a result of today's launch is we may have in our hands here a platform that would now speed up the ability for Ghanaian SMEs to now begin to trade across Africa. Because this same platform can actually now even be used, not just between Ghana and the UK, but across Africa as well. And so if the video is ready, I just want to call for it to be displayed, and then we'll move on to the next item on the agenda.
On their development of this protocol, a kind of reference implementation or reference development of what these shared open technical standards might look like. And we can have that on the screen now, please.
So, ladies and gentlemen, one more time, before we hear from our keynote speakers, we invite you to take a look at this video that explains Neofingo in its thorough, powerful essence. Take a look.
Every year, More than $120 billion of viable African trade goes unfinanced.
And it isn't because the goods don't exist, nor because the buyers aren't ready.
But because the financial infrastructure to carry the transaction through, the trust infrastructure, was simply never built for people like us.
Trade finance is the oldest financial instrument in the world. Deep at its core, it is really just a mechanism of trust, a way for a seller to be certain they will be paid and a buyer to be certain they will receive what was sold.
In practice, that trust is expressed through ancient instruments, such as a letter of credit, a document issued by a bank guaranteeing payment once agreed conditions are met, used for centuries. The gold standard of international commerce.
But here is the problem. That instrument, in the form most African small and medium exporters encounter it, is paper-based, prohibitively expensive, and functionally inaccessible to any business that isn't big already.
The African Development Bank puts the continent's trade finance gap at over $100 billion a year and growing. For Ghana alone, the estimate is at least $7 billion.
SMEs, small and medium enterprises, make up more than 90% of businesses across Africa and over 60% of jobs. They are not some peripheral footnotes to African economies.
They are the economy.
And yet the system that was designed to connect producers like her to buyers in London or Hamburg or Tokyo was never built with her in mind. The lift simply does not uplift. The levers are stuck.
Over the past 2 decades, international banks have withdrawn from Africa at scale, a process called de-risking. Compliance costs, perceived sovereign risk, and the burdensome weight of international banking regulation have made them retreat.
African banks have lost nearly 40% of their correspondent banking relationships in recent years. In some cases, the Nostro accounts they're required to maintain with international banks now lock up so much cash that there is pretty little left to deploy at home.
And even where relationships remain, the hurdles are formidable. Know your customer checks, anti-money laundering screening, document verification. Each one a reasonable requirement in isolation, but together forming a wall that keeps the smallest yet most dynamic businesses permanently locked out.
The irony is that modern neobanks and electronic money institutions in the UK have exactly the tools to solve this: sophisticated compliance technology, risk appetite, and of course, digital rails. Oh, and deep pools of capital all around. But they lack the cross-border networks to deploy them in Africa. 2 worlds, equally capable, talking past each other across an ocean.
Neofingo is a digital finance corridor. At its core is a new class of financial instrument, the Neo LC, a digital letter of credit, designed for the world as it actually is, mobile, AI-enabled, and built on open standards.
The Neo LC is not a merely digitized version of its paper predecessor. It is programmable, it meets all the international standards, and it is accessible to an SME on a mobile phone in Kumasi in the same way it is accessible to a trade desk in London.
The SME exporter connects to the Neofingo corridor through a mobile or desktop interface within the existing Fintech environment. An AI assistant, Nomi, guides them through letter of credit creation, document validation, and submission, step by step, in plain language.
Nomi translates the language of international trade finance, a language that even experienced bankers find dense, into guided conversational workflows. The expertise oozes comfortably from the system. The user simply has to show up with their goods and their ambition.
And on the liquidity side, a Nostro-light settlement model, where African fintechs hold settlement accounts with London neobanks, but post dramatically less cash collateral than traditional correspondence arrangements require. Because of the AI-enabled shared data environment, that freed up capital stays in the African economy.
In time, a network of development finance institutions shall provide guarantee facilities to scale this up. Risk shared, ambition enabled.
The Neofingo protocol does not operate outside of policy. It is designed to work with regulators, not around them.
The Bank of Ghana's regulatory policy sandbox, a controlled, supervised environment in which the protocol's proof of concept can be tested, evaluated and refined, shall provide full regulatory visibility, innovation and accountability sitting together at the same table. That's the winning formula.
The United Kingdom's Electronic Trade Documents Act 2023 solved a problem that had blocked digital trade for decades. The question of legal ownership of an electronic document. London is now, in legal terms, the global architect of digital trade law. Neofingo exports that architecture.
Powered by Ghana's 24-Hour Economy Initiative, championed by the Presidential Coordinator and the 24-Hour Economy Authority, is an ambitious national program to expand productivity around the clock, formalize previously informal economic activity, and build the digital infrastructure for sustained export-led growth.
Neofingo is, in a very real sense, the financial software for that productivity hardware. If Ghana's industries are working through the night, they need a settlement and financing system that keeps pace. Round-the-clock trade demands round-the-clock finance.
The result is a policy environment of exceptional coherence. The Bank of Ghana providing the regulatory trackway, the 24-Hour Economy Authority providing implementation fuel, the UK's ETDA providing legal foundation. Takeoff is all but guaranteed.
The African Continental Free Trade Area, the AfTA, is the most ambitious trade integration project in human history. 54 nations, a combined GDP of $3 trillion, a consumer market of 1.4 billion people.
The AfTA, Secretariat's digital platform, the AfTA Hub, is the operational nervous system of this integration ambition. And it is within the AfTA Hub that the Neofingo protocol finds its widest expression.
The AfTA Hub serves something bigger than a mere technical gateway. It is the reference implementation, the proof of concept, through which the Neofingo protocol lives and breathes. Transactions passing through the hub demonstrate, within the Bank of Ghana's policy sandbox, that the architecture works in the real world.
And the commercial architecture the hub enables goes far beyond a simple two-country corridor. Consider triangular trade, goods produced in Ghana, financed and enhanced in the United Kingdom, and sold to buyers elsewhere on the continent. Each leg of that triangle can now be financed, tracked, and settled through a single standards-aligned protocol.
Then there is diagonal accumulation. Yes, that's a mouthful, but a simple mechanism really. Under trade rules, this concept allows inputs from multiple African countries to be treated as originating from a single source for duty-free access to target markets. An exporter drawing on cocoa from Ghana, share from Burkina Faso, and packaging from Senegal can now present a single validated set of origin documents.
Therefore, collapsing barriers that have historically made producing goods with Pan-African inputs so difficult. The AfTA's rules of origin rules were always ambitious on paper. Neofingo and the AfTA Hub shall make them straightforward in practice.
Neofingo represents a new model of development cooperation, one that takes African countries like Ghana truly beyond aid. A new logic built on a commitment to those who have been locked out the longest. SME exporters, especially businesses led by women and young people, are the top priority, because if they do well, the entire society lifts up.
The dream is big indeed, onboarding 25,000 SMEs over the next 5 years, reducing their transaction costs by 40% over the period, and ensuring a tenfold increase in AI-Sur, accelerated letters of credit issuance. and critically, boosting the exports of Ghana's largest productive base, small businesses, to scoop and pump hard currency into the Ghanaian economy at scale.
There is also a dimension that goes beyond the balance sheet. When a small business run by a woman in Tamale can access the same financial tools as a medium-sized exporter in Singapore, something changes in the story a country tells about itself.
From London to Accra, there is a community that has always held both worlds simultaneously. Nearly 300,000 people of Ghanaian heritage live in the United Kingdom. They remit money home. They trade informally. They build businesses across 2 continents using informal channels because the formal ones were never designed for them.
The London to Accra campaign at the heart of Neofingo's launch positions the corridor as their bridge. The Ghanaian diaspora in the UK, especially those importing Ghanaian products for British-based businesses and consumers, or running e-commerce operations, are an initial and natural target community.
And for British digital financial services firms, neobanks, electronic money institutions, regtech companies, trade finance software providers, the Neofingo corridor is a growth opportunity of a different kind. Ghana is a gateway to a continent of 1.4 billion consumers and a rapidly growing middle class that is choosing digital finance over legacy banking at a rate that outpaces almost every other region on Earth.
Britain's global leadership in financial services cannot rest on past glories. It requires refreshed imagination to build new connections, to take what works in London and enrich it with the push and rhythm of Accra, to bridge worlds and bond hearts.
The architecture of the Neofingo protocol is, at its core, an architecture of resilience. Each component reinforces the others. The AI compliance engine lights up the governance layer. The Bank of Ghana's policy savvy interweaves with world-class London rules.
Indeed, neither side of the corridor is sufficient, but together the system is unstoppable. The technology does not replace the governance. Through its audit trail, it cements it. Trust is the name of the game.
Exits and entries into the corridor are smoothed by the open API architecture. Every player adds value. None becomes overbearing. Trust grows with value creation, transaction by transaction.
And at the most human level, the woman sorting shea nuts in Tamale, the young exporter in Kumasi. The resilience of the protocol means that their access to trade finance does not depend on knowing the right banker, on having the right family name, on being large enough to matter. Their reputation, built transaction by transaction in the smart record, becomes their collateral. There has been much talk in recent years of a new kind of partnership between Europe and Africa, one that moves beyond the legacy of aid and dependency, one that is built on mutual interest, equal governance, and genuine respect.
Neofingo is not talk, though. It is architecture. Its governance model transcends the paternalistic and charity mindsets of old. Its open standards mean that all can contribute value. Its benefits are quantifiable, and they flow in both directions, north and south.
Britain exports centuries of legal and financial creativity. Ghana and its African counterparts bring local market knowledge, SME networks, and the scalable demand that makes the whole corridor commercially viable. Neither is the donor, neither is the recipient. Both are builders.
The Ghana corridor, the first proof of concept, carries a signal beyond its own borders. If this model works here, with this coalition of partners, it becomes a replicable template. Nigeria, Sierra Leone, Kenya, and in time, across the full breadth of the AfTA.
What Neofingo is attempting is a new model for what cooperation between Europe and Africa can look like when ambition is matched with discipline, and discipline is guided by trust. Trade finance has always been about trust. Neofingo is a new infrastructure for that trust, one that the smallest exporter and the largest institution can share equally.
If you are a business that exports, an institution that finances trade, a regulator shaping the rules, or a policymaker building the scaffolding for the next decade of African growth.
The corridor is open, the protocol is ready, and the moment is now.
Ladies and gentlemen, we cannot wait for Neofingo to be launched eventually, but today, just as a reminder, is not the launch. We have a little bit of, way to get there. Today, we are starting the conversation of why it works and how we want you involved. Speaking about involvement, as we deepen this conversation on partnership and opportunity, it gives me great pleasure to invite our first keynote speaker. Please warmly welcome His Majesty's Deputy Trade Commissioner representing the UK Foreign, Commonwealth and Development Office. Please welcome Ben Ainsley.
Good morning, Your Excellencies, distinguished guests. It's a pleasure to be here. It's a pleasure to join you on this important gathering focused on shaping the future of digital trade between the United Kingdom and Africa. Let me begin by recognizing and sincerely thanking our hosts and partners, ODI Global, the 24-Hour Economy Authority, the Bank of Ghana, AFCFTA Secretariat, the regulators, financiers, innovators, exporters, entrepreneurs, and policymakers who are all here with us today. Your leadership and contributions are vital to the success of initiatives like this. Growth is a priority for both of our governments, and we know that services is already a driver of our trading relationship. Of the £1.5 billion the UK and Ghana traded last year, over half was trade and services, and with Ghana having a healthy trade surplus already. Today's forum marks a pivotal moment in the evolution of UK-Ghana economic engagement, enabling us to focus on unlocking mutually beneficial growth. It signals the start of a long-term effort to build a shared digital corridor, one capable of reducing frictions and unlocking meaningful opportunities for SMEs on both sides. Achieving this will require collaboration across the entire trade ecosystem. Governments and central banks, commercial banks, fintech innovators, port and customs authorities, standards bodies, and most importantly, the SMEs who drive our economies. The Neofingo initiative, designed to build a UK-Ghana digital trade finance corridor, offers an innovative solution to long-standing challenges, from documentation bottlenecks to trust gaps, right across the entire value chain. By establishing a shared digital public infrastructure, Neofingo aims to create a more efficient, transparent, and predictable environment for cross-border trade finance. Crucially, Neofingo aligns with the UK's broader commitment to supporting African nations in strengthening regional supply chains and expanding access to trade finance and driving African-led digital transformation. It reflects our shift towards investment-led partnerships, driven by economic cooperation, working alongside governments and the private sector to build the foundations for long-term sustainable economic growth. This direction is reinforced by the Electronic Trade Documents Act, which has positioned the UK at the forefront of global digital document recognition. We are committed to working with African partners to ensure these innovations translate into real commercial gains right across the continent. The UK also strongly supports bold economic reforms and policies across the continent that strengthen macroeconomic resilience, tackle infrastructure backlogs, and create competitive environments that attract investment and spur productivity. Reforms that promote regulatory transparency, enhance the ease of doing business, and modernize key sectors are essential to unlocking Africa's full economic potential. We commend Ghana's continued commitment in this direction, including efforts to strengthen public financial management, modernize its trade ecosystem, and advance the 24-hour economy agenda. Ghana's leadership in fintech regulation, its innovation-friendly environment, and its work under the AFC-FTA digital trade framework makes it an ideal partner for piloting a digital trade finance platform on this scale. The African Continental Free Trade Area remains one of the most transformative economic initiatives of our time, creating a single market for 1.4 billion people. The UK strongly supports AFC-FTA's vision and recognizes that digital trade infrastructure will be essential to achieving its goals. We see real potential for Neofingo not only to strengthen bilateral flows, but to become a scalable asset for Africa's wide regional integration. Today is about co-creation. Neofingo is still at an early stage, and your insights will shape its architecture, governance, and value. If Neofingo succeeds, it will reduce financing gaps, increase productivity, reduce delays, expand export volumes, and enhance SME competitiveness on a global stage. This success will be measured by impact, particularly on SMEs, the exporters, agribusinesses, manufacturers, logistics providers, and service forms that are the backbones of our economies. For diaspora and businesses, trusted digital pathways will reduce barriers and deepen their engagement in bilateral trade. The UK is firmly committed to supporting this initiative. We will continue working closely with stakeholders in both countries to ensure the platform develops in a manner that is inclusive, secure, interoperable, and commercially viable. Today's discussion lays the foundation for a modern UK-Ghana partnership, one that is defined by collaboration, innovation, and mutually beneficial economic growth. I look forward to the conversations ahead and to working with all of you as Neofingo evolves from a concept to a fully operational network, one that enhances trade finance, not only between the UK and Ghana, but right across the African continent. Thank you so much.
Thank you. Ladies and gentlemen, another round of applause for Mr. Ben Ainsley. We're convening here at the Bank Square under the auspices of Ghana's 24-hour Economy Secretariat. A round of applause for them. In partnership with ODI Global, the UK Foreign, Commonwealth and Development Office, FCDO, the British High Commission, the AFC-FTA Secretariat, and British International Investment, of course, across Ghana and the United Kingdom. And now, ladies and gentlemen, in a moment where Accra and London are connected both in purpose and in real time, we now shift our gaze and our attention to the City of London in the United Kingdom. Ladies and gentlemen, we now have our second keynote address given to us by Ghana's High Commissioner to the United Kingdom. Please warmly welcome Her Excellency Saba Zita Benson, joining us live from London.
The Governor of the Bank of Ghana, Presidential Advisor on the 24-Hour Economy Authority, members of the FCDO, distinguished guests, ladies and gentlemen, excellencies. I am honored for the invitation to address this distinguished gathering at a time when the global trading system is undergoing profound transformation in the midst of geopolitical tensions among allies and between foes. I wish to express my gratitude to ODI Global, the government of Ghana's 24-Hour Economic Secretariat, the AFC-FTA Secretariat, and the Bank of Ghana for convening this timely forum. Indeed, amid shifting of geopolitics, supply chain reconfiguration, and the imperative for sustainable growth, the partnership between Ghana and the United Kingdom stands as a model for resilience and shared values. We can deepen this partnership by shaping a sustainable UK-Ghana trade architecture, which is anchored in diplomacy, strengthened by existing sound regulatory frameworks, and enabled by robust institutions, while aligning with Ghana's evolving development strategy and key priority sectors. The United Kingdom and Ghana share a long-standing relationship rooted in history, reinforced through the Commonwealth, and increasingly defined by forward-looking economic cooperation. Since the United Kingdom's exit from the European Union, both countries have taken steps to recalibrate trade ties under bilateral frameworks that prioritize flexibility, innovation, and mutual growth. However, the demands of the 21st century require us to go beyond preferential market access and tariff schedules. The future of trade will increasingly be defined not only by physical connectivity, but by digital interoperability. Trade's future is digital. Finance future is interoperable. The future of UK-Ghana cooperation must be strategic, collaborative, and future-oriented. We must build something durable, advanced, credible, and strong. Secure platforms, transparent financial systems, and harmonized regulatory systems now determine how efficiently capital, goods, and services move across borders. Trade finance remains the lifeblood of international trade, yet a continuing global trade finance gap continues to constrain opportunity, particularly for small and medium-sized enterprises. For Ghanaian exporters and UK investors alike, accessible, efficient digital trade finance mechanisms are vital to unlocking inclusive long-term growth. Digitalization reduces transaction costs, improves transparency, strengthens compliance, lowers fraud risk, and expands access to credit. But technology alone cannot build lasting trade systems. We need strong diplomacy, clear rules, and reliable institutions. Institutional strength is the backbone of sustained viability. Financial regulators, central banks, customs authorities, trade ministries, and private sector innovators must operate in coordination. Institutional coherence increases credibility, fragmentation weakens it. Capacity building in digital trade documentation, risk assessment, SME credit evaluation, and compliance monitoring is essential. Our institutions must also be resilient, able to endure economic volatility, geostrategic shifts, and technological disruption. Thus, a sustainable trade architecture must address value addition, and industrial transformation, climate resilience and green growth, digital trade and services, inclusive participation, particularly for SME and the youth. I'm delighted to note that Ghana is positioning itself deliberately within this new paradigm. Ladies and gentlemen, at the heart of Ghana's current development policy framework lies a bold ambition to transition from a raw material exporting economy to a diversified value-added export-driven economy. Central to this ambition are two flagship initiatives, the 24-hour economy and the Accelerated Export Development Program. This program represents a structural reset of Ghana's production model. It is designed to enable continuous round-the-clock productivity across agriculture, manufacturing, logistics, and services, thereby maximizing the utilization of capital, labor, and infrastructure. By encouraging businesses and public institutions to operate in 3 shifts, the policy aims to boost output, expand exports, and create jobs, transforming Ghana into a globally competitive economy. It should be understood that this policy is not merely about longer working hours. It is about re-engineering value chains, promoting industrial clusters, and embedding Ghana within global production networks. Complementing this is the Big Push, a multi-billion-dollar infrastructure program focused on roads, rail, ports, and inland water transport to enhance connectivity and to reduce the cost of logistics. This initiative recognizes a simple truth that trade competitiveness is built on infrastructure. Efficient transport corridors, energy reliability, and digital connectivity are indispensable to unlocking trade potential. Together, these policies create a powerful platform for UK-Ghana trade and investment. Ghana could take a cue from the UK's framed development model state-of-the-art industries and world-class transport networks. The private sector right here in the UK may partner with Ghana to leverage on our already excellent bilateral relations. My mission will continue to collaborate with the UK to accelerate our shared objectives. Distinguished guests, going forward, a sustainable trade architecture must be underpinned by proactive and strategic diplomacy. We must move from transactional engagement to co-creation of value. Ghana invites the United Kingdom not only as a trading partner, but as a co-investor in industrial transformation, particularly in sectors such as agro-processing and food systems, pharmaceuticals and health manufacturing, textiles and garments, digital services, and fintech. Our diplomatic engagement must prioritize policy alignment by aligning UK development finance with Ghana's industrial priorities, leveraging platforms such as the UK-Ghana Trade Partnership Agreement, strengthening collaboration through institutions such as UK Export Finance and Ghana's investment promotion agencies, while also deepening people-to-people linkages, skills partnerships, academic collaboration, and diaspora engagement, recognizing that human capital is the backbone of trade. The UK-Africa policy is, of course, a step in the right direction. Ghana is undertaking significant reforms to create a more enabling business environment by streamlining investment regulations and incentives, enhancing transparency and digital governance, reviewing labor industrial policies to support the 24-hour economy. However, sustainable UK-Ghana trade requires regulatory coherence across borders. We must therefore work towards mutual recognition of standards and certifications, harmonization of customs procedures and digital trade systems, as well as collaboration on environmental, social, and governance standards. Ghana is committed to ensuring that bilateral innovation aligns with regional goals. The UK-Ghana Trade Finance Corridor must support regional value chains and Africa's digital trade. Importantly, this trade architecture must be inclusive, benefiting not only multinational corporations, but also youth entrepreneurs, women-led enterprises, and emerging exporters. Digital transformation should reduce barriers, not create divides. Inclusivity, predictability, and toughness must guide our joint efforts. Bilateral efforts should strengthen and not divide global trade systems. I am glad to state from my observation and interactions from the Court of St. James through FCDO, as well as the public and private sectors, that the UK is more than ready for a meaningful win-win partnership. Excellencies, the establishment of the 24-Hour Economy Authority signals Ghana's commitment to coordinated implementation, align public and private sector efforts while addressing infrastructure and regulatory needs. More broadly, Ghana recognizes that security, good governance, and efficient public administration are essential to investor confidence and long-term trade growth. International partners, including the United Kingdom, have a critical role to play in supporting institutional capacity through technical assistance, knowledge exchange, and joint ventures. The World Bank has observed that Ghana's transformation agenda, anchored in the big push and the 24-hour economy, can significantly expand trade and reduce poverty, but only if supported by strong governance and strong institutions. I dare say our development partners may align with these national initiatives to consolidate Ghana's sustainable development. Distinguished ladies and gentlemen, Ghana stands ready as a stable democracy, a gateway to West Africa, and a committed partner to deepen its economic ties within the United Kingdom. The convergence of Ghana's ongoing domestic transformation agenda and the UK's global trade outlook present a unique moment that we must seize with ambition, clarity, and purpose. I entreat us to work towards an enduring trade architecture driven by value addition and industrialization, enabled by modern infrastructure and logistics, resilient and adaptable to global shocks. an architecture that creates opportunities for SMEs, women, and youth, and delivers shared prosperity for generations to come. To conclude, the mission is working closely with its partner UK institutions to organizing the forthcoming Ghana-UK Investment Summit from the 1st to 2nd of June 2026. These and many more issues on the plate, hopefully, would be pursued in its mutual interest of our two friendly countries. Let us therefore use this forum not only to exchange ideas, but to advance practical commitments, structured regulatory dialogue, institutional collaboration, fintech partnerships, and measurable milestones that translate drive into action. To summarize, our key priorities are deepening UK-Ghana bilateral trade, strengthening economic resilience, and ensuring that digital trade is secure, inclusive, and sustainable. Let us concentrate on practical action, regulatory cooperation, institutional cooperation, inclusive participation, and measurable progress. I look forward to seeing the concrete outcomes and practical commitments that emerge from today's forum. Thank you.
Thank you very much. Ladies and gentlemen, a round of applause for Ghana's High Commissioner to the United Kingdom, Her Excellency Saba Zita Benson. Another round of applause. A little louder.
Thank you so
we
much,
can be
Your
heard
Excellency,
on the other
and everyone
side
also at
of
the
pond, as we like
Bank
to
of
call
Ghana in
it.
Accra.
Thank you very
It
much,
was absolutely
London.
wonderful to be connected here and live.
Thank you so much, London. And ladies and gentlemen, by now you know that trade isn't only about moving goods, across borders. It is also about the opportunity that you are creating between people, human beings. It is about whether a business can grow, whether a product can reach a market, whether value can truly flow. And ultimately, that is what a Neofingo represents. It is an attempt to make that flow way easier. As you saw us crossing from Accra to London, that's how easy it should be, and that's how easy it will be. Now, ladies and gentlemen, as we together prepare for our next conversation, I would like to humbly ask that you draw your attention to something huge, something critical. Now, we've been talking about capital. We've been talking about systems. Of course, we're here discussing a corridor. But none of this works without infrastructure. Now, this infrastructure is the invisible rails that carry the trust. You've heard the word trust so many times in the video. Her Excellency mentioned it as well. We're also talking about liquidity and ultimately transactions across borders. At the heart of this corridor, there are two essential forces, and those forces are how capital is structured and accessed, and ultimately how payments will move. Platforms like Second Stacks are rethinking how markets connect, while institutions like the Fintech and Payment Association are shaping the ecosystem that allows innovation to scale. So the question eventually becomes, how do we build rails that are not just fast and efficient, but that are trusted, inclusive, and truly interoperable? So, with that said, it gives me great pleasure to invite to the stage two extraordinary CEOs, Eugene, who is representing Second Stacks today. Eugene, where are you? Okay. Ladies and gentlemen, a round of applause for Eugene Teria, Second Stacks, and Martin Awaga, representing Fintech and Payment Association. And these two leaders, as I like to call it, are building the commercial reality of what ultimately Neofingo will describe. Gentlemen, what are you discussing between you? I haven't joined and you're already gossiping. Let me bring you, okay, you've got a microphone. Now, these two gentlemen are friends. I'm now their third wheel. They have some history between them. It's good history, correct?
Yes, yes.
Absolutely. No, Martin, why are you looking straight in my eyes? It's like, you know I've been told something, but you've got good history. Yeah. But gentlemen, today we're really talking about how efficient, effective, ultimately useful, and how the big push, if I may use those terms, will be represented in Neofingo. Eugene, I want to start off with you because Second Stacks is built to connect African capital markets. I would like to know, first of all, from your experience with Second Stacks, and of course from what you can see, the potential of Neofingo, how can platforms like yours within the Neofingo corridor enable institutional investors in London to securely channel liquidity into Ghana's SME trade ecosystem?
Sure. So I guess at the core of what we are building, like you rightly said, is making our capital markets more accessible. You can't really have a lot of trade finance if the cost of capital is still where it is in most of our African countries. Finance is too expensive, period. Forget about the fees that are charged for moving things around. If you're going to access a loan and you have to pay upwards of 20%, your business better be generating some incredible returns for you to be able to pay that back. And so that effectively cuts out a lot of the SMEs who, rightly we said, are the sort of cornerstone of most of our economies. So what we are doing is really trying to tap into the capital that is on the continent. These sit in mobile money accounts, these sit in people's bank accounts, and all of this should go into the capital markets to acquire these securities, whether they are bonds, governments, corporates, whether they are stocks. And by so doing, you have a lot more of that circulation happening. When that happens, and someone in London can see that there is liquidity here that I can tap into, I can trade off of that risk, but being able to do it in a way where it's not an opaque box that they are going in allows them to also reduce their risk appetite in terms of what could go wrong if I invested in Ghana versus in the US or something like that. So that's what we are looking to do. Yeah. And I think by bringing all of these markets together, providing that much more liquidity and reducing the cost of capital, then the lady who was doing the share product on screen now actually can sort of move from it's too expensive to even run my business to say, now I can run it and outside of my local economy, I can export it to London. That is what we want to see happening.
And that was what we will see happening. Any SMEs in the house, please? SMEs. Does this sound like music to your ears? Are you building the trust? Because we are going to bring the microphone to you along the way, and we want you to comment, to contribute to this conversation, because this essentially will benefit you, especially the women. All right, so Martin, when we talk about Ghanaian fintech landscape, it is maturing nicely. It is supporting, business to business, trade nicely, but how does it maybe easily and more easy support business to business rather than just consumer payments, ultimately?
Okay. So thank you once again, and thank you for the audience. Now, we need to understand that when fintech started in Ghana primarily, it was just a retail-led system, whereby, with the likes of mobile money, we were seeing P2P transactions. Yeah. But currently, that ecosystem, or the fintech ecosystem in its own entirety, is transitioning. Like you rightfully mentioned, it's transitioning from P2P-led or retail ecosystem to becoming an infrastructure-embedded-led ecosystem. That means we are seeing the likes of, open banking initiatives that are enabling trade between borders or across borders. And so this kind of discussion should be how we can, take advantage of these platforms. These, digital finance platforms across borders to enhance, financial trade, because a lot of the times, most of the, trade finance is encumbered in paperwork. But with an infrastructure-led digital system or solutions, we can be able to, break down that, complexities of paperwork, difficult times that, you even make the transactions between, and it takes weeks. Yeah. Trade finance takes weeks to even get to the other part of the world. And so platforms like Neofingo are basically what we are leading to that infrastructure, B2B enablement that can, help us achieve this mandate. And so we are now moving, like fintechs are now moving from just sending money from, for instance, from me to you, which is mobile money, P2P ecosystem, to more commerce-enabled industry or ecosystem. And that is what, the acceleration has been, or the trend is leading towards.
Thank you so much, Martin. And I have my good sister, Cynthia, here from the AFCFTA. And many times, you know, I've had the privilege of being on platforms where we've talked about inclusivity, particularly small, fairly smaller entrepreneurs who are essentially holding up the economies, but they are being left behind. Martin, since I have you here, I put you on the spot.
Yeah.
You are live around the world. How do we ensure that digital innovation in finance remains inclusive, particularly for our underserved markets and our smaller entrepreneurs?
Okay, so a lot of times the word financial inclusion or inclusivity does not necessarily end at, you know, access, financial access. It includes usability, affordability, and then, you know, how productive these platforms or these solutions are to the SME, basically in Tamale or in, you know, any other part of the country. So these are the things we're talking about. So currently, Ghana has achieved, I mean, on the continent, we've achieved a massive level of adoption of mobile money, like I said earlier on, a retail-led ecosystem, to now seeing the adoption of an infrastructure-led ecosystem. So that means inclusion has been achieved. But how then do we move beyond inclusion to providing access to finance to some of this? And that's where we are seeing, you know, fintechs coming up with even microcredit and micro insurance products that even the banks are yet to, you know, see how fast they can.
Be careful how you say that. We're in Bank of Ghana, so.
You know.
No, but go ahead.
Anyway, so we need to understand some of these narratives that, in as much as we are launching Neofingo in Ghana, and particularly in Accra, it doesn't end here. There's the need to spread this message across the country. SMEs need information. And like I said, and they also need the finances. So fintechs and the banks, currently we are seeing a lot of collaboration in that angle. So there's the need to provide or ensure more collaboration between more commercial banks, the commercial banks and the fintechs, so that they can easily or leverage on these platforms or these digital rails to basically provide financial access to SMEs to basically partake of this infrastructure to enhance cross-border or international trade. And that is why this digital finance platform is being provided.
Wonderful. And when we do get to, hopefully by the time we do get to the official launch, it will be hugely inclusive of real life and real-time experiences. Eugene, talking about the launch that will eventually happen after this conversation, let's talk about what it will take to move from this pilot stage, piloting these projects, to a truly continental digital trade infrastructure.
So I always look at this space in terms of innovation as sort of the next wave of capital investment on the continent. We invest in roads, we invest in schools, we invest in hospitals, etc. But the core engine of everything that we do today is technology. A lot of these applications, Neofingo is one, would require capital, will require the sort of personnel that will go to the most remote areas and be able to lay down sort of what is accessible to sort of the farmer, the industrial shop, the processing factory. And all of this doesn't come free, unfortunately. So how do we also, again, provide a way where we can de-risk a lot of these things by reducing the cost of the capital that goes into actually financing them? I mean, there's no point having a fantastic system as Neofingo if the person who's using it only has like a feature phone and has probably never even used a laptop before, right? So some of this is going to be how we create the opportunity for this infrastructure to be truly accessible. There are some areas where connectivity to the internet is probably going to be a challenge. Do we create some of the things that have become successful to its point in mobile money where those agents serve as sort of community clusters where some of this interaction will happen, and sort of mapping that out under the auspices of the 24-hour Economy Secretariat, and really sort of thinking about sort of what is happening on the ground and where we need to go. So those will be the areas I think we'll need to focus on and figure out a way to de-risk that with some patient capital. Yeah.
You know, I have to say, with what you're saying, I was pleasantly and warmly, not surprised, but I was happy when, Arnold Parker just highlighted that, no, this is not the launch, because it is imperative for us to absorb what the story is really on ground before we finalize this infrastructure. So a big thank you to 24-Hour Economy Secretariat for considering the real people, that is the people who are actually going to be the beneficiaries of Neofingo. But regulatory hurdles and everything else in between and compliance are critical. Before you gentlemen go, what would you say is the single biggest regulatory unlock that is needed to allow fintechs to play a larger role in national export development? Eugene, we start off with you.
So I believe we need our regulators.
Absolutely.
There is real important things that they do to protect the ecosystem, to make sure things are happening the right way and everybody's following the rules. Innovation by its nature will always be ahead of where the regulators are. And so we need some way where we bring our regulators along with all of the work that we're doing. Okay. I see Sandbox as a good and effective way to do this, and I know BOG has one, SEC just recently put one in place. The other part of this, very similar to what we are talking about here in terms of digitizing some of the documentation, etc., I think that also needs to be a focus. Someone having an idea and being able to codify that and saying, this is the framework in which this needs to work. Maybe some of that also needs to be a lot less onerous on these sort of startup, small businesses. So for them, in as much as they're trying to solve a problem that they see in front of them, an opportunity for them to tap into, they're not going through so many hops to even get to that sandbox. So for me, I think that partnership also needs to shift to mirror the way technology and innovation is happening, so we don't have a lot of that friction that ultimately becomes what you see, but truly growing in partnership with our regulators. I think that will be a great thing for us to see.
Yeah, so innovators know that regulators are your friends. Regulators know that innovators are your friends. That powerful relationship in between. Martin, what would you say?
For me, the biggest unlock would not just be what we call open data. Open data, basically, in the financial industry is what we call open banking frameworks. Open banking frameworks basically allow for a lot of data to be shared between regulators and the financial services industry, players in the financial services industry, like the banks, the fintechs, the telcos, or the mobile money operators, and what have you. And for me, seeing what is happening now, or the trend, this opportunity will be able to help empower commerce across borders. Good. And once we are able to achieve or unlock open banking or open data in Ghana's financial ecosystem, we'll see a lot of API, or basically application programming interfacing a lot of players within the digital economy, be it SMEs, be it someone producing shea butter somewhere, So all this is a potential opportunity that we have to unlock, that we have to be able to make sure we provide the regulatory ambit for, and that way we'll be able to achieve, critical mass in terms of achieving or enhancing how fintechs can be able to take opportunities like this to allow for cross-border transactions and, commerce and trade. Thank
Wonderful. Sounds good to me. Ladies and gentlemen, a round of applause for our two CEOs, Eugene Terrier from Second Stacks and Martin Awaga from Fintech and Payments Association. Please, a round of applause for our gentlemen. Thank you very much, gentlemen, for joining me. And as my CEOs take their seat, I migrate to my next panel. Just a word to our wonderful audience here in Accra. I will be taking not questions, but your thoughts, your contributions along the way during a section that we have beautifully labeled as the Vox Pop session. Remember, we are needing, or we need your input on this. So what we're building through Neofingo Corridor is not just a platform. By now you know it. It is an actual system. It is an infrastructure, and one that should and will work across policy, finance, technology, and the real economy, which is you. Now, to explore this conversation, we are joined by a distinguished panel representing what I like to call the full ecosystem. I don't have the names in front of me, but I have the organizations. I will humbly call on you. Samlara, do we have some names? Wonderful. Wonderful. Thank you so much. Ladies and gentlemen, we're going for a quick, what I would have called on television, a quick commercial break. We'll come back with the panel so that we can set up for the panel. But like I said, this is an opportunity for us to engage. I'm coming down with the microphone. Please put your hand up if you have any contributions at this time. If you know me by now, even if your hand is not up, I'll give you the microphone and you will be stuck. So please be ready with your thoughts. I need just one contribution from an SME. If you put your hand up as an SME, unfortunately, I'm coming to you. I can see somebody looking at their phone, pretending to be busy, but I know they're not on their phone. They just don't want to lock eyes with me. You are an entrepreneur, SME. What business are you in? What scares you about digital finance? And what gives you hope at this point, now that we are discussing Neofingo and all its benefits? Your name, your organization, what you do, and what gives you hope? Or what scares you and what gives you hope?
Okay, thank you so much.
Please stand up so that my colleagues from the media can grasp you on camera. Go ahead,
Thank you
please.
so much for this opportunity. I'm Rachel Colley from Cilium Errands. I'm into the production of virgin coconut oil.
Okay.
Yes. So I've learned a lot. I thank Neofingo for this opportunity because, you know, when you talk about exports, you need a lot of capital to go in there, and even the production capacity, yes. But I believe with this, no matter your capacity, you'll be able to log in and then be able to export.
We want to hear from you. What constituency do you serve? By that I mean, do you serve Ghana? Do you serve the international community? The international, what do you serve?
Okay, so I'm a startup and I serve Ghana, but I have the intention and then interest of exporting.
Okay.
Yes.
So this will be fundamental to your business and the growth of your business.
Yes,
Thank you so much.
Thank
All
you
right.
so much.
Anybody else want to make a contribution? Not to worry. I'll come to you with the microphone. So think about it. Get ready. And in a few minutes, we move into our panel. And this panel will focus on a few more integral elements here today. Thank you so much. Two, three. All right. Thank you so much. All right, ladies and gentlemen, I've got clarity now. We can move right ahead with our panel. And as I said before, what Neofingo is doing is building an infrastructure, if you want to call it a system. It gives me great pleasure to bring up to the stage a distinguished panel representing the full ecosystem, as I mentioned before. Please warmly welcome Tess Pippin from the British High Commission, and we're going to be using BHC's element, as I would like to call it, to anchor the vital UK-Ghana partnership. Thank you so much, Tess. And I have a representative from the Yaira Glover Group. Are you here? If not, we will move right ahead. Not to worry at all. Can I please have Mr. Emmanuel Ansa Amprofi, who is representing the Federal Associations of Ghanaian Exporters? Thank you so much. Good morning, good morning, good morning. Lady and gentlemen, essentially, Tess and Emmanuel, what I would like to do is take this conversation through a few pillars, starting off from maybe, let's just call it setting the foundation, looking at systems and infrastructure, and what that should look like, how we benefit from it. Tess, I come to you first of all. Thinking about the United Kingdom, you know, the UK has been a pioneer in digitalization of trade practices. We know this, and of course, you've provided all kinds of support for this event and more. Now, how does the establishment of a digital corridor like Neofingo align with the United Kingdom government's broader strategy and, you know, maybe your smooth mission, perhaps, when it comes to trade flows?
Thank you very much. So just to introduce myself very briefly, my name is Tess Pippin. I work at the British High Commission, Accra, in the role as a Regional Trade for Development Advisor. So that means I lead on implementing the UK-Ghana Trade Partnership Agreement. And what the Trade Partnership Agreement does is that it reduces tariffs for Ghanaian exports to the UK market, so providing duty-free, quota-free access to the UK market for Ghanaian exporters. But we know that tariff barriers aren't the only barrier to exporting. And so that's why something like Neofingo is perfectly aligned with the UK's ambition to make cross-border trade more smooth for exporters, and particularly for SMEs, who we know struggle with access to finance and access to capital. And it also is perfectly aligned with our commitment to regional trade integration and trade facilitation. So the UK has long been a supporter of the World Trade Organization Trade Facilitation Agreement. We were the first country to sign an MOU with the AFCFTA Secretariat. And we've also designed our trade policies to support regional trade integration. So enabling accumulation between countries in Africa so that they can export more easily to the UK.
Excellent. Tess, you mentioned something that is crucial, access to finance. Emmanuel, I want to hook onto this concept of access to finance and what it takes to unlock liquidities for our SMEs. You heard an SME over there. Lots of SMEs have potential, they are capable, but they just don't have the liquidity. When you think about FAGE, or as you're representing FAGE today, what are the biggest challenges your members are facing in accessing finance, and what perhaps new and better systems are they looking for from the banking sector?
Right, thank you, Anita, thank you. By way of introduction, my name is Emmanuel Ansam Profi. I'm an SME and currently also lead the project team at FAGE, Federation of Association of Ghanaian Exporters. FAGE is actually the apex body when it comes to the various associations within the export sector. So this is actually a good one. Access to finance has been the big elephant in the room. And the reason is this, that Ghanaian SMEs face a lot of hurdles in accessing patient capital. The reason is this: when we say patient capital, a capital that is resting and at least can give you a bit of breathing space. Now, the major exporters are actually even suffering. Come to think more of the SMEs. And so, I mean, way back, this should be about 20 years ago, when I was in the UK, Croydon or just around South Node, you go to any of the Ghanaian markets and find fresh kontomire. Now, That is because a farmer in somewhere in Agogo might have shipped it through BA and it gets there. But the question is, how much finance did the exporter was able to get, and at what percentage of interest rate? Now, lowest TSB or NatWest will be giving you something around single-digit interest. Over here is about 35% sometimes. Now, that is even on the traditional banking level. When you go through the various microfinance, it goes way beyond 10% a month or even 15% a month. And that is what the average farmer or average aggregator in Agogo or in Konongo market is facing. The average local woman that is doing tomatoes at Achimota is facing that microfinance gap in terms of interest rate. So that is one of the biggest one. The second has to do with documentation. Now, you go to trade shows and we get orders from people, and the capacity to do the fulfilling is not there because the farmer is not being ably capacitated to be able to do consistent supply. And that comes with a lot of industry infrastructure challenges. One, logistic is equally one of the key ones. Now, we get the products from our farm place. Bringing the yam from our farm place will take days. So imagining it is coming from, say, Tamale. So these are some of the systematic barriers and hurdles that we face. So access to finance is a very huge one. Another way is that the banks do not really understand exporters. It goes beyond exporters, the whole agricultural value chain. Now, the reason is you cannot give the same rule that you are giving to, or the same requirements you are giving to, quote unquote, a false importer to a pineapple farmer. Now, pineapple needs minimum 14 months. Even within the same agricultural value chain, vegetables have various gestation period. So the same way you give to watermelon farmer is not the same facility you would have given to a pineapple or even a cashew farmer or mango. So these are the things that the banks need to really understand. Most banks do not have export decks. They are interested in your books. How much money can you bring in, and not really understanding what it takes to put in.
Emmanuel, I don't want us to stay in the darkness of this tunnel. I want us to go towards the light. Right. If you had a magic wand, what would be maybe, let's just call it top 2, top 3, top 4 ways that you believe banks or the financial sector can meet the needs of these SMEs?
First, understanding the whole scope of agribusiness, agri-financing. BOG, I'm glad we are in a BOG building, must actually make it set special parameters for agri-financing because it goes a way long. And then because without the production, there's nothing for export. So here we are now talking about the lack of tomatoes, that Burkina is now banning their tomatoes. But the same soil condition that Burkina is enjoying to be able to produce tomatoes for us, to be spending $150 million in Burkina just importing tomatoes. The northern and then the upper west, the upper regions have a better condition than that of Burkina. So one, understanding systematic. The banks BOG must set a special single-digit interest rate for agri-financing. That's number one. Second has to do with logistics and supply chain improvement. Now, if we're able to put proper measures in, and I'll give an example, using the Tamale Airport, for instance, as a hub for agricultural and horticultural export. It means that mangoes from Kintampo or Techiman, yam from Techiman, will actually get to UK faster than it will even get to Accra. Because within 4.5 hours, it's here. Straight, it's in UK. So the Kumasi market in Peckham, or that of the Brixton, Makola in Brixton market, will be able to access this. Now we have over according to the last 2021 census in the UK, about almost 1.6 million Africans living in this is the documented ones. Imagine. So let's
stick with all of them.
So no, that is a whole market.
Yeah, on a more serious note,
That is a whole market. So even aside that, looking at the larger UK market, we do a lot of coffees.
Yes.
So we have the coffee that is coming from the Volta region, being able to reach the London and Manchester far easier. And that is what will now make sure that we get the intended inflows, the effects that we are looking for, so that your city will not be dancing as on to.
Emmanuel, wow, it's only Thursday. All right. But thank you very much. And we'll delve deeper into that. I mean, these kinds of conversations will be happening systematically, periodically. So, and we want your contribution to that. I mean, Tess, let's you know, like I said, let's get out of the darkness of the tunnel. Let's go to the light a little bit. We've heard about the digital handshake between London and Accra. We felt a glimpse of it today. Now, if I may, could you elaborate on the specific synergies that you see between the United Kingdom's mature open banking ecosystem and Ghana or Africa's rapidly advancing fintech landscape?
Absolutely. So I think, you know, building on the London to Accra campaign, it's clear that two of our great cities, not our only two great cities, but two of our great cities are kind of really at the heart of digital innovation. Yeah. So I think from the UK side, you know, the UK operates kind of the world's most advanced open banking ecosystem, secure environment for data sharing, a hub of competition and innovation in payments and finance, and is Europe's leading fintech hub. And London produces more tech unicorns than any other city in Europe. And I think the complementarity between London and the UK and with Ghana is that Ghana has such rapid digital adoption. The mobile money penetration here is so high, and kind of innovation around payment platforms, etc. So I think the kind of co-creation between those systems can really be leveraged to build greater success in this space. And I think the kind of advantage of Neofingo, and while not being kind of the only solution to addressing some of my colleagues' concerns, it's a key solution to building that trust between the UK and Ghana, financial trust around documentation and verification, etc. So I think that together, building on already the strong connections between London and Accra, including the diaspora, we can really bring together the supply and the demand.
That's excellent. Tess, so let's bring it from the national and let's bring it right down here to the ground. So from the British High Commission's perspective, why is the modernization of service-led exports so critical for a resilient 24-hour economy, and how can digital finance unlock this potential for SMEs like my colleague?
Thank you. Well, we know that all exports are key for domestic economic transformation. They drive productivity, they create jobs, and they increase investment. And that's even more true for trade and services because they're not reliant on physical infrastructure, but they are reliant on digital infrastructure, which is exactly what we're talking about today. But services also don't need to operate on kind of a 9 to 5. They can be traded around the clock, which is exactly kind of the principle behind a 24-hour economy. And it really reduces the constraints that kind of physical trade has, like ports, logistics, and, you know, even time zones. So, you know, for both Ghana and the UK, services are already such a key part of our economy. They're a key part of our trade. And I think that a project like this is essential for unlocking the potential within that trade, particularly for small, medium enterprises and for women and youth who we know are kind of overrepresented in services industry and where kind of economic growth can really be generated.
Great. So Emmanuel, Tess has highlighted, you know, or began to highlight what the potential is, you know, when it comes to modernization. And I'm not bringing you back, but I just want to kind of emphasize the importance of modernization from the perspective of FAGE. And from the perspective of a local exporter, what would you say are the primary friction points in the current cross-border trade processes that need urgent modernization? And of course, we've got AFCFTA here, so scream it loud from the mountaintop so we can find solutions for you by close of day.
Right, so Tess mentioned some clearly, and it means that she's actually in the system for long. Key ones are documentation and the bureaucracies. The red tapes are just plenty. One of the key issues for exporters on our end is that before you even get your documentations right, before it takes off, think of, let's say, Netflix sending yam to UK, and then even okra to the UK. The documentation and the bureaucracy sometimes tend to be too much. And because the various agencies are not really connecting. So you have FDA sitting on one side, you have GSA, Ghana Standard Board, sitting on one side. Then you have the NACOP sitting on one side, because everything that you are shipping, narcotics control must also be involved. So the documentation and the bureaucracy needs to be reduced. And that is why systems like this one will help. Another key area has to do with the various custom clearance issues. Especially when you are dealing, this is UK. UK is a bit okay. But if you're dealing with some of the European countries and the EU countries, the shifting of goalposts, you beat all the requirements today. Tomorrow, there are another phytosanitary requirement is coming in, and they abandon your chili peppers and stuff like that. So all those ones needs to be proper. Because some of the EPAs, the Economic Partnership Agreements, it's not favoring us. And so those are some of the areas we should be looking into. Payment and settlement, and we're glad we're having this because there are times that exporters have sent things to Middle East, especially. They are one of the most difficult ones when it comes. And they will tell you that, oh, banking systems is not that. You need to wait additional days or additional months. And imagine that you've picked a facility from, say, GCB or any of the banks, and then you are giving you a whole container of mangoes, quote unquote, could be rejected. In fact, you ended up with that it's fraud. It's not really that your mangoes are not good. It's because the person doesn't want to pay. The importer doesn't want to pay. And so imagine a whole 20-footer or 40-footer container of mangoes landing in Dubai, and then they are having these issues. Another key areas has to be with the infrastructure, and that one it's a no-go area. We need to make sure that we don't build airports and let them sit idle. We have to make use of them. So we have 3 or 2 international airports now. Let Accra handle the passengers. Kumasi and Co should be able to handle the cargoes so that products coming from Techiman and its neighboring environment will be easily flown into these areas. Same with Tamale. And so those are the ports. And then a bit of the regulatory compliance. Make it clearer for an SME in Bato to be able to send or label properly the coffee that is coming from Avetime or all these areas to be able to make it to those markets. So those are the key things that, from the exporter's point of view, we believe must be looked at.
Perfect. And I'm going to come to both of you for your last words, as we wrap this panel up. Do I have any of our delegates here with any questions or contributions thus far? Anybody? I give you 15 seconds, 10 seconds, 5 seconds. Remember, we need your contributions to firm up and to make sure Neofingo works for you. Emmanuel, if you were the president of the Republic of Ghana and you had launched the 24-hour economy with what you know about the SMEs and their needs, what would be your priority as we're discussing Neofingo? What would you ask for Neofingo to do today? Mr. President?
Production first.
Okay.
Thank you, making me an excellency for a few minutes. So production first, because without properly supporting the SMEs to produce the right product for the market, you can make the fantastic business plans, it will not work. And that will actually feed into the job creation. Imagine you are setting aside 1 million youth, each of them doing 1 million farmers or youth target, each of them doing average 5 acres. That's 5 million acres under cultivation. There's no way that you could say that you don't have a particular product to fit the market. So those are the key things that we should take. And that will also stem from making sure that the policies that we build are being implemented and it's working. You don't do policies and let it sit on the shelves dusting. Make sure that agri financing and the whole value chain within agri have a single digit. It is only that way that we could be able to export more and then have a stronger CD to the FX. And then equally, your populace will be able to eat better.
Okay. Well, I hope you're not running for office anytime soon.
Never.
Never. But more importantly, thank you very much for synthesizing and crystallizing all of that for us, Emmanuel. Tess, I won't ask you to be queen for the day, but your thoughts on Neofingo, words of advice and encouragement, most importantly, as we look at, once again, this digital handshake and this relationship currently between Accra and London, but of course, across the continent of Africa and, around the world.
Thank you. I think I'm glad not to receive a promotion like my colleague, but I think I just want to emphasise the UK's commitment to advancing our trade relationship for both goods and services with Ghana and across the continent. And I think that initiatives like Neofingo are at the heart of that as we build partnerships that are designed to create mutually beneficial economic growth.
Thank you so much. Ladies and gentlemen, I've had Tess Pippin from the British High Commission, again, like I said, echoing the anchoring of this vital UK-Ghana partnership. Thank you very much, Tess, for giving us your powerful words and for representing the BHC. And also I've had Emmanuel Ansah Amprofi, representing the Federation of Associations of Ghanaian Exporters, giving a voice to the industry. Thank you so much. Thank you so much, Tess. Thank you so much, Emmanuel. Please, another round of applause for my panelists. All right. So now, ladies and gentlemen, my direct boss has asked me to empower your palate with a short break where you can have a little bit of breakfast. My Ghanaians, a little is a little. Okay, we have time to have literally a 7-minute break. No kenke, no wache. It is tea and coffee and juice. So ladies and gentlemen, your breakfast is right around the corner. I will call you back in 6 minutes so we proceed with our next fireside chat and panel discussion. Thank you so much.
Every year, more than 100 trade goes unfinanced.
And it isn't because the goods don't exist, nor because the buyers aren't ready,
But because the Every year, more than $120 billion of viable African trade goes unfinanced.
and it isn't because the goods don't exist, nor because the buyers aren't ready,
But because the financial infrastructure to carry the transaction through, the trust infrastructure, was simply never built for people like us.
Trade finance is the oldest financial instrument in the world. Deep at its core, it is really just a mechanism of trust, a way for a seller to be certain they will be paid, and a buyer to be certain they will receive what was sold.
In practice, That trust is expressed through ancient instruments, such as a letter of credit, a document issued by a bank guaranteeing payment once agreed conditions are met, used for centuries. The gold standard of international commerce.
But here is the problem. That instrument, in the form most African small and medium exporters encounter it, is paper-based, prohibitively expensive, and functionally inaccessible to any business that isn't big already.
The African Development Bank puts the continent's trade finance gap at over $100 billion a year and growing. For Ghana alone, the estimate is at least $7 billion.
SMEs, small and medium enterprises, make up more than 90% of businesses across Africa and over 60% of jobs. They are not some peripheral footnotes to African economies.
They are the economy.
And yet the system that was designed to connect producers like her to buyers in London or Hamburg or Tokyo was never built with her in mind. The lift simply does not uplift. The levers are stuck.
Over the past 2 decades, international banks have withdrawn from Africa at scale, a process called de-risking. Compliance costs, perceived sovereign risk, and the burdensome weight of international banking regulation have made them retreat.
African banks have lost nearly 40% of their correspondent banking relationships in recent years. In some cases, the Nostro accounts they're required to maintain with international banks now lock up so much cash that there is pretty little left to deploy at home.
And even where relationships remain, the hurdles are formidable. Know your customer checks, anti-money laundering screening, document verification. Each one a reasonable requirement in isolation, but together forming a wall that keeps the smallest yet most dynamic businesses permanently locked out.
The irony is that modern neobanks and electronic money institutions in the UK have exactly the tools to solve this: sophisticated compliance technology, risk appetite, and of course, digital rails. Oh, and deep pools of capital all around. But they lack the cross-border networks to deploy them in Africa. 2 worlds, equally capable, talking past each other across an ocean.
Neofingo is a digital finance corridor. At its core is a new class of financial instrument, the Neo LC, a digital letter of credit, designed for the world as it actually is, mobile, AI-enabled, and built on open standards.
The Neo LC is not a merely digitized version of its paper predecessor. It is programmable, it meets all the international standards, and it is accessible to an SME on a mobile phone in Kumasi in the same way it is accessible to a trade desk in London.
The SME exporter connects to the Neofingo corridor through a mobile or desktop interface within the existing Fintech environment. An AI assistant, Nomi, guides them through letter of credit creation, document validation, and submission, step by step, in plain language.
Nomi translates the language of international trade finance, a language that even experienced bankers find dense, into guided conversational workflows. The expertise oozes comfortably from the system. The user simply has to show up with their goods and their ambition.
And on the liquidity side, a Nostro-light settlement model, where African fintechs hold settlement accounts with London neobanks, but post dramatically less cash collateral than traditional correspondent arrangements require. Because of the AI-enabled shared data environment, that freed-up capital stays in the African economy.
In time, a network of development finance institutions shall provide guarantee facilities to scale this up. Risk shared, ambition enabled.
The Neofingo protocol does not operate outside of policy. It is designed to work with regulators, not around them.
The Bank of Ghana's regulatory policy sandbox, a controlled, supervised environment in which the protocol's proof of concept can be tested, evaluated and refined, shall provide full regulatory visibility, innovation and accountability sitting together at the same table. That's the winning formula.
The United Kingdom's Electronic Trade Documents Act 2023 solved a problem that had blocked digital trade for decades. the question of legal ownership of an electronic document. London is now, in legal terms, the global architect of digital trade law. Neofingo exports that architecture.
Powered by Ghana's 24-Hour Economy Initiative, championed by the Presidential Coordinator and the 24-Hour Economy Authority, is an ambitious national program to expand productivity around the clock, formalize previously informal economic activity, and build the digital infrastructure for sustained export-led growth.
Neofingo is, in a very real sense, the financial software for that productivity hardware. If Ghana's industries are working through the night, they need a settlement and financing system that keeps pace. Round-the-clock trade demands round-the-clock finance.
The result is a policy environment of exceptional coherence. The Bank of Ghana providing the regulatory trackway, the 24-Hour Economy Authority providing implementation fuel, the UK's ETDA providing legal foundation. Takeoff is all but guaranteed.
The African Continental Free Trade Area, the AfTA, is the most ambitious trade integration project in human history. 54 nations, a combined GDP of $3 trillion, a consumer market of 1.4 billion people.
The AfTA, Secretariat's digital platform, the AfTA Hub, is the operational nervous system of this integration ambition. And it is within the AfTA Hub that the Neofingo protocol finds its widest expression.
The AfTA Hub serves something bigger than a mere technical gateway. It is the reference implementation, the proof of concept, through which the Neofingo protocol lives and breathes. Transactions passing through the hub demonstrate, within the Bank of Ghana's policy sandbox, that the architecture works in the real world.
And the commercial architecture the hub enables goes far beyond a simple two-country corridor. Consider triangular trade, goods produced in Ghana, financed and enhanced in the United Kingdom, and sold to buyers elsewhere on the continent. Each leg of that triangle can now be financed, tracked, and settled through a single standards-aligned protocol.
Then there is diagonal accumulation. Yes, that's a mouthful, but a simple mechanism really. Under trade rules, this concept allows inputs from multiple African countries to be treated as originating from a single source for duty-free access to target markets. An exporter drawing on cocoa from Ghana, share from Burkina Faso, and packaging from Senegal can now present a single validated set of origin documents.
Therefore, collapsing barriers that have historically made producing goods with Pan-African inputs so difficult. The AfTA's rules of origin rules were always ambitious on paper. Neofingo and the AfTA Hub shall make them straightforward in practice.
Neofingo represents a new model of development cooperation, one that takes African countries like Ghana truly beyond aid. A new logic built on a commitment to those who have been locked out the longest. SME exporters, especially businesses led by women and young people, are the top priority, because if they do well, the entire society lifts up.
The dream is big indeed, onboarding 25,000 SMRs over the next 5 years, reducing their transaction costs by 40% over the period, and ensuring a tenfold increase in AI-SUR, accelerated letters of credit issuance, and critically, boosting the exports of Ghana's largest productive base, small businesses, to scoop and pump hard currency into the Ghanaian economy at scale.
There is also a dimension that goes beyond the balance sheet. When a small business run by a woman in Tamale can access the same financial tools as a medium-sized exporter in Singapore, something changes in the story a country tells about itself.
From London to Accra, there is a community that has always held both worlds simultaneously. Nearly 300,000 people of Ghanaian heritage live in the United Kingdom. They remit money home. They trade informally. They build businesses across 2 continents using informal channels because the formal ones were never designed for them.
The London to Accra campaign at the heart of Neofingo's launch positions the corridor as the bridge. The Ghanaian diaspora in the UK, especially those importing Ghanaian products For British-based businesses and consumers, or running e-commerce operations, are an initial and natural target community.
And for British digital financial services firms, neobanks, electronic money institutions, regtech companies, trade finance software providers, the Neofingo corridor is a growth opportunity of a different kind. Ghana is a gateway to a continent of 1.4 billion consumers and a rapidly growing middle class that is choosing digital finance over legacy banking at a rate that outpaces almost every other region on Earth.
Britain's global leadership in financial services cannot rest on past glories. It requires refreshed imagination to build new connections, to take what works in London and enrich it with the push and rhythm of Accra, to bridge worlds and bond hearts.
The architecture of the Neofingo protocol is, at its core, an architecture of resilience. Each component reinforces the others. The AI compliance engine lights up the governance layer. The Bank of Ghana's policy savvy interweaves with world-class London rules.
Indeed, neither side of the corridor is sufficient, but together the system is unstoppable. The technology does not replace the governance. Through its audit trail, it cements it. Trust is the name of the game.
Exits and entries into the corridor are smoothed by the open API architecture. Every player adds value, none becomes overbearing. Trust grows with value creation, transaction by transaction.
And at the most human level, the woman sorting share nuts in Tamale, the young exporter in Kumasi. The resilience of the protocol means that their access to trade finance does not depend on knowing the right banker, on having the right family name, on being large enough to matter. Their reputation, built transaction by transaction in the smart record, becomes their collateral. There has been much talk in recent years of a new kind of partnership between Europe and Africa, one that moves beyond the legacy of aid and dependency, one that is built on mutual interest, equal governance, and genuine respect.
Neofingo is not talk, though. It is architecture. Its governance model transcends the paternalistic and charity mindsets of old. Its open standards mean that all can contribute value. Its benefits are quantifiable, and they flow in both directions, north and south.
Britain exports centuries of legal and financial creativity. Ghana and its African counterparts bring local market knowledge, SME networks, and the scalable demand that makes the whole corridor commercially viable. Neither is the donor, neither is the recipient. Both are builders.
The Ghana corridor, the first proof of concept, carries a signal beyond its own borders. If this model works here, with this coalition of partners, it becomes a replicable template. Nigeria, Sierra Leone, Kenya, and in time, across the full breadth of the AfTA.
What Neofingo is attempting is a new model for what cooperation between Europe and Africa can look like when ambition is matched with discipline, and discipline is guided by trust. Trade finance has always been about trust. Neofingo is a new infrastructure for that trust, one that the smallest exporter and the largest institution can share equally.
If you are a business that exports, an institution that finances trade, a regulator shaping the rules, or a policymaker building the scaffolding for the next decade of African growth,
the corridor is open, the protocol is ready, and the moment is now.
Ladies and gentlemen, please take your seats. Please take your seats. It's time to start off with the second part of our program, Humbly. Please take your seats. We will start in 1 minute. Please take your seats. please take your seats kindly. Thank you so much. Please take your seats so we start off the second part of our program. Please, thank you. From my tech station, please feel free to play a little bit of music. Thank you. Ladies and gentlemen, with due respect to our upcoming speakers, kindly, humbly, may I ask you to take your seats. Thank you. Colleagues, ladies and gentlemen, please in 5 seconds or 10 seconds, if you can kindly take your seats, please. With respect to our speakers who are scheduled to speak right now, kindly take your seats. Thank you. Five seconds, if we can settle the room down, kindly. Please settle down for us as we proceed with the second part of our program, which will start off with a fireside chat. Ladies and gentlemen, kindly settle down. For those of you at the back of the room, humbly, if you could take your seats, please. Thank you. And now we move. Distinguished ladies and gentlemen, excellencies here with us, Neofingo is not just a Ghana-UK corridor. It is a potential blueprint for this extraordinary continent we call Africa. And as we move toward a single digital market under the AfCFTA, key questions do emerge. How do national initiatives like Ghana's 24-hour economy scale continentally? What must we harmonize to enable seamless trade? And lastly, how do we move trade, not aid, into real working systems for African exporters? Now, at the center of it all, as we always know this, is political will and the ability to align regulation, finance, and innovation across borders. And we've heard snippets of that throughout the morning today at this program. So, ladies and gentlemen, to deep dive into this, please help me welcome Cynthia Nasimbe Esonam. Now, Cynthia is the Senior Advisor to the Secretary General of the African Continental Free Trade Area Secretariat, and she is here to share her thoughts on how we move forward. A round of applause for Cynthia Nasimbe Esonam. My dear sister, you can take a seat right there so we sit in the middle. Your applause has to be louder, especially since you've had breakfast. Thank you so much. Thank you, thank you, thank you. So, Cynthia, I'm so grateful that you joined us from the beginning of the program. So you heard from our colleagues from the Fintech space. You heard from our colleagues from British High Commission. You heard from our colleagues from the exporter space, etc. So this is a wonderful time, and it's an opportune time for you on behalf of AFCFTA to share your thoughts on a few really important points. Starting off with, Ghana's 24-hour economy. How do initiatives like this serve as the building blocks for the broader African continental free trade area?
Thank you very much, Anita, and good morning to the audience. It's really a pleasure for me to be here representing the AFCFTA Secretariat just across the road. So it's, and this is really a timely conversation that we are having, especially in this particular moment where we, as the AFCFTA Secretariat, 5 years down the line, we have managed to establish what we call the single rule book for trade in goods and trade in services and other activities on the continent. And we are now shifting mode. We are now into the implementation mode. So when we're talking into implementation, we are saying, how do we see trade happens on the continent, and of course from the continent and across, from Africa to the global market as well. So it's for us, when we are looking at the implementation of the AFCFTA, I truly believe that it has to start from the countries themselves. If at national level we don't have the conducive environment, the enabling environment for businesses to produce at scale, for businesses to thrive and be able to export across the market and tap into that one single, the one African market, we will not really achieve our objectives. So that is why initiatives such as the 24-hour economy initiative is critical, because this is really the engine that will allow for productive capacity to be developed at national levels, for that ecosystem to be created for the market that we want to tap into on the continent. So the 1.3 billion market, the 3.5 trillion USD, GDP. So it's really important to have such initiatives. And for us, as I said, it's really about connecting these small initiatives across the continent so that we have the scale that we are looking at.
AFCFTA, Africa's most ambitious strategy thus far, huge potential, but we cannot run away from the fact that 54 countries, which means that different kinds of standards across board, we've got to accept it. But in accepting it also, perhaps we can also underline which critical standards we need to harmonize across the continent today in pursuit of the single digital market. What would they be?
So if you ask me, I think what we have to really look at for us to create that digital African digital market is, and some of the previous speakers mentioned it, it's really about looking at documentation. Because again, we are looking at how do we support the 90% of our businesses that constitute the economic landscape of Africa. These are the SMEs, those that we've been talking about since morning. How do we ensure that they participate fully in the AFCFTA? So for us, it's really about digitizing the trade documentations, the certificates of origins, all the trades that actually is needed for this intra-Africa trade to happen. Secondly, how do we, and we've spoken about it since morning, is how do we make the payment system interoperable? That is critical also. And that's why when you look at the digital trade protocol that was negotiated between the various member states, the African countries, it covers all these areas. So the digital trade protocol today seeks to harmonize all the regulations related to digital trade. And when we are talking about these regulations, we are looking at movement of data, data governance, how do we cross-border payments, interoperability between the payment systems. We are looking at digitization of documentations and issues in relation to even how do we use the emerging technology in a sustainable way, as well as what do we consider to be an AFCFTA digitally produced goods or services. So you can see that it's really a framework that's seek to really harmonize all these regulations that apply to digital trade. But if you are asking me right now, what do we need to accelerate that trade that we want to see on the continent, I believe it's really about the trade documentations that we have today. And what we are doing at the AFCFTA Secretariat, for instance, is the digitization of the e-certificate of origin, the AFCFTA e-certificate of origin. So that needs to be harmonized across all the member states. And why this 24-hour or the Neofingo approach is good is really because we are looking at pilots. So when we come up with initiatives such as the e-certificate origin, digitization process that we are doing, we would like to find countries that are ready to pilot this. So at the moment, it's really about looking at the countries that are ready to implement these protocols, especially the digital trade protocol, and then to test and pilot these tools and instruments that are also coming up, as I mentioned, is either the transit regime, for instance, when we are talking about trades on the continent, or how do we make sure that the documentations are digitized and utilized by the exporters themselves. So that pilot approach is very important for us, and I think that is how we are going to be able to really kick off the implementation at grassroots level and test systems, tools that are developed, and of course scale them across the continent.
So, Cynthia, when you talk about grassroots level, let's take it up to eagle eye level. AFCFTA, you have a full overview of the potential of the continent, and then you have a slogan: "Trade, not aid," which also lingers. How do we move this from being a slogan into a reality, especially when you can see the huge potential the continent has?
I think we are starting with the Neofingo project, our initiative. I recall when I joined the Secretariat maybe 3 years ago, one key initiative that the Secretariat was looking at is really this issue of trade finance. How do we reduce the cost of finance? And in trying to come up with a facility that can allow the AFCFTA and other financial institutions and partners, I recall that we had engagement with not just the development financial institutions on the continent and the commercial banks, all of them, but also other international institutions such as DFC in the UK, DFC in the US, BII in the UK, etc. So the idea was to say, how do we really de-risk or come up with a facility with a risk mitigation, anchored on some risk mitigation system that allows our commercial banks or our DFIs to actually, give more trade finance capital to the commercial banks for on-lending. So this has been quite a difficult discussion that we've been having with all these partners. And because, we know that with the commercial banks, probably their role is really not to, to provide this type of financing for SMEs. We've been talking about it. Sometimes, there is a gap between what the SMEs want and what kind of needs these commercial banks need to address through the trade finance or through, for access of finance. So for us to see such an initiative such as the Neofingo, where we are looking at connecting or using, the system from the UK to allow us to have that kind of trade finance instrument for either through letters of credit and directly accessible to our SMEs, I think this is what we are looking for. So we are now moving from aid to trade because we are entering into a collaboration that is mutually beneficial, leveraging on the capabilities of our partners. And in this particular case, we are talking about the Ghana and the UK corridor. And I believe these are, as I said, pilots that should be scaled across the continent to allow our businesses and SMEs to have access to finance. So for me, moving from trade to aid, especially on this particular issue of trade within the continent or trade from the continent to the rest of the world, is going to be really looking at access to finance, and that is what we are trying to solve with the initiative.
Hope and potential are huge, Cynthia, and you've said it ever so beautifully. I couldn't say it any better. But we have to still deal with the legacy of traditional barriers, their historical impact, and how they have historically slowed down intra-African and global trade. Knowing this, what is the role of political will in removing these, real and subliminal, barriers?
Political will is important. And I believe that the continent has received that type of, political will, especially when it comes, we're talking about the AFCFTA, the African Continental Free Trade Area. It is the fastest instrument, African Union instrument that has been ratified, the fastest ratified African Union instrument, and instrument that has been adopted and ratified by, signed and ratified by many countries at the same time, in 5 years, basically. So we see it as a demonstration of the political will. Without that leadership from the top, I don't think today we will have had, as we are speaking, 50 countries that have ratified the agreement. That means when we are talking about the EFCFTA market, we are talking about a market that brings together 50 countries. So it has been done. The protocols have been negotiated, completed. Now, it does not stop at just the ratification. At the government level, at country level, we have to take another steps, which is to domesticate these instruments in the national architecture. And we see that some of the countries, we have countries that are actually leading on this, I'm not going to name, but there are countries that are really taking that next steps to actually bring the various protocols into their national laws, and by doing so, allowing the businesses to really participate in the EFCFTA preferential regime. So again, I think with this initiative that we are seeing and launching today, it's another example or demonstration of the political will in this country to really allow our, not just through the 24-hour economy, but at the same time come up with model of corporations that allow us to really build our domestic capacity, trades more between, not, as I said, across the continent, but also with the rest of the world. So it is important to have that political will, and but at the same time also the private sector, all the partners at the moment really have to come on board to push for that implementation to happen at national level, so we can see that the market taking shape. Yeah.
Cynthia, when Neofingo is launched eventually, successfully, hopefully quickly, what would you see as AFCFTA as being what will change fundamentally, economically, for our African SMEs?
I think it's quite clear, and we've been talking about it the whole day. It's, for us, really the Neofingo initiative, what it will do is, as we said, to allow a woman sitting in a market to be able to have access to finance and exports its products. It will allow that woman, and if we actually bring it in the context of maybe the AFCFTA hub, that we have developed and which is sitting in the AFCFTA's website. The hub is basically a place where we are integrating and bringing all the actors that participate in the trade to be connected so that it's easy to trade. So the AFCFTA hub is there. And what we really want to see, and I think that will be really a demonstration of the success, is to get to that point where as a woman trading in the market or across the border, let me say in Aflao, will be able, using her handsets, to actually send her have an access to market to another, let's say to Togo, for instance, using the handset, connecting to logistic operators, having access to finance, and be able to ship, to send their goods across the border. So really what we are trying to say is we know that the supply is there, the demand is there. What is lacking is the access to finance. And when we have it, it's costly. So reducing that cost of trade is key. And for me, the Neofingo project is going to come and help at least reduce that, I would say, cost for our SMEs.
Cynthia, I don't think I can allow you to go without talking about regulation, because it's crucial. We can have all the plans in the world, but without endorsement from our regulators or without the regulatory handshake, there's very little we should do. Earlier on, Emmanuel and Martin, talked about it, where innovation and regulation have to work hand in hand. Now, one fundamental component of Neofingo really, or the proposal, is this regulatory handshake, which aligns Ghana's Bank of Ghana guidelines with UK standards and ultimately, hopefully, with the AFCFTA protocols. Now, how can the AFCFTA Secretariat help export the successful regulatory lessons, as we're beginning to learn from this Ghana-UK pilot, to other countries, just to ensure that we're all on the same page?
So we are testing. It's a project that is going to be launched. It's a pilot. And what we will do is, of course, take the lessons from this pilot and scale it across other countries. And what I think is also important, and if we align with what we are doing at the Secretariat, where we are coming up with also some sandbox projects, is to be able to actually collaborate. Because at the moment, we have this corridor, which is the Ghana UK corridor, which is going to be launched. But at the same time, sitting at the Secretariat, we also collaborate with other countries like Nigeria, Kenya, South Africa, on some other sandbox projects. So I think that collaboration needs to take place so that we can actually use this corridor, which is the model reference, to, and scale it to other corridors that also can come up. While we test and assure that anything that is happening on this project, for instance, can be scaled up. So it's really about piloting, testing, and which model works, we just scale up across the continent.
Well, Cynthia, thank you very much for joining us. Ladies and gentlemen, Cynthia Nyasimbe Esonam is the Senior Advisor to the Secretary General of the African Continental Free Trade Area Secretariat, here sharing her thoughts on the Ghana-UK corridor. And of course, eventually when Neofingo is launched, hopefully AFCFTA will pick it up and use it as a blueprint for the continent of Africa and the world. Cynthia, thank you so much. Ladies and gentlemen, another round of applause. Thank you. May I humbly ask my colleagues with the muscles to kindly remove these chairs, please, so that we move to the last part of our gathering here today. Thank you very much, my brother. To move to the official launch and the white paper ceremony that will be ably led by the Chief Program Officer at the 24-Hour Economy Secretariat. And he will declare that the protocol has now been not necessarily launched, but the conversation of the protocol has been launched. And as I said before, especially because we've got our media professionals here, our media fraternity, to underline that this is, the launch of the conversation towards it. We've invited stakeholders here because it's essential to hear exactly how this protocol should be designed to better suit and serve our SME community. So if I may kindly have, can we please have the chairs removed, please, as we move to the last part of our program, kindly? Anybody can help us to do that. And I will ask to be in readiness my brother, Abdul Nasser Alidu. As I said before, Chief Program Officer at the 24-Hour Economy Secretariat, as we move to the last part of our program today. Ladies and gentlemen, just by reference, I do have to say that today's convening has been brought to you courtesy the Ghana 24-Hour Economy Secretariat in partnership with ODI Global, the UK Foreign Commonwealth and Development Office FCDO, the British High Commission, BHC, AFCFTA Secretariat, and British international investment across Ghana and the United Kingdom. Now the stage is clear. We can move to the last part of our program this morning. Ladies and gentlemen, please warmly welcome the Chief Program Officer at the 24-Hour Economy Secretariat, Abdul Nasser Alidu, who will bring us to the great unveil. My brother, the stage, there's a microphone here for you. Here, you can have mine.
Thank you very much. I appreciate it. And I'll stand on existing protocol. I guess my task here is to launch the consultation and it's important to underline this is the launching of the consultations for the Neofingo system, because it's really a system, it's not an app. And the Neofingo system is meant to enable trade and to bring in especially the SMEs into trade. Now, why is this important? Just want to give a few words about why we think this is important and why at the 24-Hour Economy Secretariat becoming an authority, why it's important that we focus on this. So 24-hour economy is really around restructuring the Ghanaian economy and moving it away from an economy that is largely import-dependent to one that is more resilient and that is competitive locally and on the global market, and that's also resilient. Now, to do that kind of restructuring, export is important. That's why when you look at the name, it's not just 24-hour economy, but it's 24-hour economy and accelerated export development. Exports are important for a lower middle-income country like ours, because it's from these exports that you earn the foreign exchange that we require to purchase the things that we don't produce yet. So the intermediary goods that we need, the machinery, the technology, and all of that, is through the exports that we earn the foreign exchange. Now, why is it important to bring in the SMEs into this? SMEs basically help us diversify our export base. If we allow SMEs, or we provide the environment that allows SMEs to export a lot more, we diversify it. You have a lot more products, because part of what we want to do is we want to transform production. And the way we are thinking of transforming production is not just in becoming a lot more efficient, but also increasing the variety of things that we produce. So we want to also increase the variety of things that we're able to export. We also believe that if we bring in SMEs into this space, what we are doing is we are helping create a lot more jobs, because we know that there's SMEs in Ghana that are creating most of the jobs. And most importantly, we also are able to retain a lot of the value in Ghana. So that's why it's important for us, and that's why Neofingo is so dear to us, and that is why we also believe that let's start the conversation, because we can't get everything right from the start. This involves the Fintech community, it involves banks, it involves the exporters, the SMEs, and all of that. We want to launch the conversation so we can receive feedback, we can get different points of view, and helps us to ensure that when we eventually launch this, we are launching a product that works, and that works very well. So on that note, I think I'm going to invite Your Excellency Ben Aisley to join me on stage so that we can together launch the Neofingo consultation.
Ladies and gentlemen.
work and work well. Hopefully, in the next few months, we'll have the proper launch of the Neofingo. So thank you very much.
And ladies and
And Bank of Ghana.
Yep. Our speakers, please join us up on stage. My brother, if you could kindly go center stage, a little bit more center stage, please. Thank you so much.
Too long. Oh, Samlara, join us.
Samlara, please join us.
And
may I ask a rep from the Bank of Ghana to please join us as well? Thank you so much. So I'm just going to ask you to move forward a little bit for our media so that we can capture wonderful, wonderful photos. Sir, you can, no, you can't be in the back, so squeeze in somewhere in the middle. We want to see your beautiful red tie. All right? Ladies and gentlemen, sorry, just one moment. Media, hang on. Please give me my microphone back. Thank you.
One more photo.
Now take the photo. Ladies and gentlemen, this marks the launch of the consultations of the Neofingo protocol. Thank you so much. Another round of applause. Thank you. And now I give you back the microphone for the vote of thanks.
Now we can end it and thank all those that have helped us to make this a success. So first to our partners, and I'll start off with the Bank of Ghana. They have been very generous, giving us this space to use. We're going to need a lot of help from Bank of Ghana going forward in terms of ensuring that this protocol comes under your regulatory ambit and that we are able to do it in a way that does not break any laws, and that actually goes to help the Ghanaian financial sector. So thank you, Bank of Ghana, for being very generous and giving us the space, and also being here to grace the occasion. I'd also like to thank ODI. ODI have been a key partner in thinking about, how this protocol actually works. They've been like the brain box that we've been consulting on this, and they've also supported us with some of the funding for this launch. So thank you, ODI. Thank you to the British government and to FCDO. We are also grateful to AFTA. We know AFTA has this AFTA Hub that we are hoping to be able to leverage for Neofingo, and hopefully, once we get Neofingo going and it's successful, it helps us to also open trade in Africa. So thank you, AFTA. And to all our other partners, so British International Investment, and the Fintechs and the banks, FAGE, and all of those gathered here. We thank you for making this a success, and we hope that we keep the conversation going and make Neofingo come to life. So Neofingo Awakens, we'll make it a success. Thank you so much.
Thank you so much. Ladies and gentlemen, especially because we have our media here, please allow me to correct the title of my dear sister Cynthia Nyasimbe Esonam. She is the Director of Private Sector Engagement and Communication at the African Continental Free Trade Area Secretariat. So please correct that in your reporting kindly. Thank you very much, and I apologize for that error. All right, ladies and gentlemen, this brings us to the end of the conversation and the beginning of even more conversations to be had. Today marks more than just a talk. It really is the beginning of what I like to call alignment, not only between Accra and London, but also between Africa and the rest of the world. The Neofingo corridor is a commitment. It will unlock capital, it'll build trust, and ultimately it'll make trade work better for our African businesses, and I dare say it is about time. My name is Anita Erskine, and hopefully I get to see you at the official Neofingo launch. Ladies and gentlemen, a round of applause for our conveners, the 24-Hour Economy Authority. Thank you very much. We may continue breakfast, exchange business cards, and conversations. Have a blessed day.